How to get a small business loan. Here's what you need to do to get funding for your business with a business loan. 1. Determine how much money you need and why. Lenders will likely ask you this question, and it's also good for you to know, so you can justify taking out the debt. Depending on how established your business is, your reason for taking out a business loan could fall into one of 5 categories. To get started, to manage day-to-day expenses, to have a safety net, to invest in new equipment or inventory, to start building a business credit history. Now is also a good time to decide how much you need. Avoid guesstimating because you could end up with more debt than is necessary, or less money than you need. Instead, take the time to calculate the loan amount based on detailed cost projections, and how much you can afford in monthly payments and interest. If you're not sure how to do this, consider hiring an accountant who can help you and other accounting needs. 2. Decide which type of loan is best. It may be difficult to get a business loan if you're just starting out. Many small business lenders require you be in business for a certain amount of time and have a minimum annual revenue. If you have no revenue and no established business, you might also consider applying for a personal loan or a small business credit card. Personal loans and business credit cards are unsecured, so they don't require that you put up collateral like a business loan. That said, they typically charge higher interest rates than business loans. Also, personal loans don't help build a credit history for your business. If your business is established, you'll have several other options to fund your business, including Small Business Association (SBA) loans, bank loans, business lines of credit, invoice factoring, microloans, merchant cash advance. Each of these options varies in eligibility requirements, terms, and costs. Research each option thoroughly to determine which is best for you and your business. 3. Check your credit. If your business is established and you've borrowed money in the business name before, you may have a business credit score. Check your business credit report to get an idea of where it stands and what you can potentially do to improve it. The Experian IntelliScore Plus business credit score ranges from 1 to 100 and predicts seriously derogatory payments. IntelliScore Plus SM score range: risk level 1 to 10, high risk 11 to 25, high risk 26 to 50, medium risk 51 to 75, low to medium risk 76 to 100, low risk. If you don't have a business credit score or your score is fairly low, you may need to rely on your personal credit history to get approved for a loan. You'll have a better chance of getting approved for a loan if your personal credit score is considered good or better, so check your personal credit score to see where it falls. Here are the ranges for the FICO 8 score. Credit score rating: percent of people impact 300 to 579, very poor 16%. Credit applicants may be required to pay a fee or deposit, and applicants with this rating may not be approved for credit at all. 580 to 669, fair 17%. Applicants with scores in this range are considered to be subprime borrowers. 670 to 739, good 21%. Only 8% of applicants in this score range are likely to become seriously delinquent in the future. 740 to 799, very good 25%. Applicants with scores here are likely to receive better than average rates from lenders. 800 to 850, exceptional 21%. Applicants with scores in this range are at the top of the list for the best rates from lenders. If your credit isn't where it needs to be, consider taking some time to improve your credit score before applying for a business loan. 4. Compile financials and gather documents. Business lenders need to know if your business is a good risk before giving you money. While a business credit score can help with that, it's not the only thing lenders check. For example, you'll also need to put together your financial statements, including your balance sheet, income statement, and cash flow statement for the past year or two. You may also want to put together a business plan and include these financial statements with forecasts for the next 3 to 5 years. Other statements and documents you may need when applying for a business loan may include your business and personal bank statements, business or personal credit reports, state registrations and licenses, articles of incorporation or other required legal documents, business and personal tax returns. You don't necessarily have to have all of this information together when you apply, but it can speed up the process significantly if you're prepared. 5. Determine your collateral. Business loans typically require collateral to protect the lender's interests. If you have an established business, you may be able to put up some of your business assets to secure the loan, including Vehicles, equipment, buildings, land, inventory, accounts receivable. If you don't have sufficient business assets, you may have to use your personal assets as collateral, such as your vehicles or home. But remember that the bank can take these assets if your business defaults on the loan, so avoid using personal assets that you can't afford to lose. 6. Shop around for the best business loans. You can get business loans from several different lenders, including traditional banks, online lenders, and non-profit microlenders. The best way to find the best terms for your business loan is to compare offers from several lenders. Start by determining which lenders offer the type of business loan you want, then compare at least 3 or 4 lenders in that category. Look at the annual percentage rate (APR) they offer, as well as other terms, such as loan limits, repayment terms, fees, and penalties. The most important factors to keep in mind are the monthly payment and the total cost of the loan. If you're looking for a personal loan instead of a business loan, the process is a little more straightforward. Simply compare several top personal loan companies based on rates and other terms, and pick the one that works best for your budget. 7. Apply for and close the loan. Once you find the right lender and loan, go through the application process. Because each lender is different, you may be asked to provide documentation in addition to what's described above. Get any additional documentation to the lender as soon as possible to avoid delays. Note that it can take a while to process a business loan application, so you'll want to apply long before you actually need the funds. For example, it can take up to 2 to 3 months to get an SBA loan, depending on the situation. Keep in contact with the lender throughout the process to make sure it's going smoothly. As soon as the loan closes, create a strategy to pay off the loan. A good strategy can help you avoid the problems that come with defaulting, including losing your collateral and seeing a negative impact to your business or even personal credit score.